credit is all the rage, and everybody's trying to figure out how to entice customers, how to secure more customers, and how to make sure to minimize your risk. Let's have that conversation. I'm Howard Feldman, and this is an episode of Synthesis TV.
This is Synthesis TV, keeping you on the edge of technology and business.
Joining me in studio is Andrew Katzwinkel. He is the CEO and founder of LayUp Technologies. Andrew, good morning. How are you?
Good morning, Howard. Thank you for having me.
A great pleasure. So before we start and talk about the different aspects of it, what is LayUp?
So LayUp is the opposite of credit. We are
so do I have to scratch the whole intro?
I wanted to start there because we kind of like the anti-credit guys that's fighting this incredibly tough but impactful fight, if you will, against providing against credit solutions, finding a new way for customers to buy things without credit. And we believe that can create financial inclusion. We believe that can change the economy and really have a long-lasting effect onto millions of people's lives.
Okay, so you're anti-credit. You're the anti-credit. I think that sounds okay. It could be a marketing campaign in there somewhere if you want to be a bit cheeky. But let's forget that for now. What is in a nutshell, what is the LayUp solution?
So we've built a prepayment technology system. At its core, it's a recurring payment system. We've done a lot of the heavy lifting of integrating into the infrastructure of the banks and into various payment methods. And what we've done is we've created a simple and easy way for a consumer to buy something without accessing credit solutions. A product that's been around, a payment product that's been around since the 1950s is a payment product called LayUp. You may have remembered it, and it's a widely used payment solution for a lot of consumers.
Was LayUp South African or was it around the world?
So it has,
because I only remember it. I do remember it being popular here, but I don't know if it was.
It was in the States. That they refer to it as layaway. Really the origins of it is really just after the Second World War, if I believe, around 1950, where there was obviously a lot of consumers that were had no funds and were looking for work. And what people would do they would save towards that fridge or Christmas gift at the end of the year and start saving in about July and paying towards it. Then credit became available in the market, and there was this massive opportunity of being able to get that item up front. And little did they know that this
switched it completely.
It totally switched it, but which ended up creating a massive debt hole in the economy or globally. And you now find consumers that are entirely prohibited, over indebted. I mean, if you look at the amount of people that have impaired credit records in South Africa, it sways to the 60% mark as opposed to less people that are actually getting the credit solutions. Yeah.
Okay, and LayUp?
So LayUp, what we've done is we've built the recurring payment system, and then we've launched this product into the market, which is a digital lay-by product. It now allows retailers and businesses to be able to take that lay-by solution online, and then we've also advanced it in an in-store environment, essentially allowing a customer to be able to activate that lay-by in less than 60 seconds, going through no credit check, instant approval, and being able to access that solution.
So give me a practical example. I need to buy a new fridge. I don't have the cash on hand. What do I do?
So you would go to the till if it was a till environment, or if it was checking out on a Hershey's or one of these other brands, and you would get to the checkout. You would be able to activate that lay-by based on the pre-configured settings by that business. So the business determines how that lay-by is going to be provided, and they will determine what deposit percentage they want up front in order to secure and hold that item, and how long they're willing to allow that item to be saved towards.
So would you say it's a bit of a mixture between a lay-by and credit?
Well, no, because in our world, it's a prepaid. So you won't get the item until fully paid, but you will go through you'll go through no credit check. There will be no interest or late fees ever charged. And if you cancel and change your mind because whatever reason, because you can't afford it or because you don't want the item anymore, you will actually get your money back. So the great way that I like to describe it is prepaid versus postpaid.
Okay.
And postpaid is a world where you are accessing credit. You will go through a KYC process. You will be vetted on your credit record and your credit rating. And if you miss a payment, you are going to be hit with late fees and interest.
Right.
Obviously, non-payment will result into a bad credit rating, which can have a up to 5-year lasting effect on your credit rating. Now, let's go back to the COVID days. It's only quite recent that it disappeared. And now you're looking at potentially a consumer that's just lost their job, that now has got a bunch of medical bills that they had to pay, wasn't able to pay for that, and that will sit on their credit record for up to 5-year period. This meaning prohibiting that person from accessing credit
in fact,
in other financial institutions.
By failing once there, you've actually put yourself in this position that you've actually precluded yourself in the future.
Correct.
And what this does is it pushes that aside
Correct.
for the consumer.
Saying you can now if you're battling to access credit solutions, sick and tired of applying for these with quite a lot of invasive information that one requires, just to be declined.
Right.
Here we go. Here's a solution that is low risk. It's interest free, and you can now manage your cash flow in the way that you wanted to pay for this item over a period of time.
I've got it.
This means that we start valuing savings over credit, and that has then a knock-on effect in terms of educating consumers what it means to systematically save for something worthwhile on the horizon. And by doing so, we believe we can create more consumers that start understanding the differences between credit and saving for something, and that can have a long-lasting effect onto our economy.
Does this is there a greater risk now on the retailer
for using a lay-by solution?
For using a LayUp solution?
So little to no. You are going to have to decide on what type of business that you're referring to. But let's take a bed company. You've got manufactured locally. You've got ample stock. The product dimensions don't change or really get amended on a regular basis, and what a lay-by is doing is that we see a lot of consumers taking on products like this because they're looking for that next upgrade. They've slept on their bed for 15 years. They now want to upgrade their bed to a king size, more comfortable bed, and that's a high ticket value purchase. People aren't sitting with 20,000, 30,000 rand just sitting in their bank account, but you've already got the bed. And this now would be a solution to say, I'm going to spread this over a 3 to 6 month period. I'm going to put down a deposit, and instead of using credit, I'm going to use my cash flow from the salary that I earn every single month and incrementally pay towards it in a interest-free manner. The other major benefit is that it's entirely flexible to the consumer. So the consumer can now decide how and when they want to pay. You're not forced to make regular monthly installments. You're not penalized if you don't do that. And therefore, consumers can start saying, well, in 6 months' time, we're approaching now November, December, a lot of bonuses get paid. This is a time when I'm going to be able to access cash flow, and therefore I'm going to activate a lay-by today to wait for my bonus to make that final payment and do it in a 2-part payment. And that's one of the beauties of our technology, is that before LayUp was in the market, is that you could only do it in store. you would have to take 15 to 20 minutes to activate and store through a bunch of paperwork. And then each time you wanted to make a payment, you were required to come back to that physical store to make a subsequent payment.
Right.
Which is an inconvenience for a consumer.
Yes, for sure.
Just to make their way all the way out there just to make a payment. So with our technology, you can now do it online. You can do it in store as well. But once activated, you have the ability to make future payments from the comfort of your home. You've got an easy to use dashboard. It tells you how far along you are, and it gives a very rewarding feeling as you get closer and closer towards your end goal, what is ultimately receiving the product. And what we're seeing is the dopamine hit that a consumer gets in buying in this way is actually a lot more effective and rewarding than taking credit solutions where you know that you've got looming debt.
It really does encourage, you're saying it before, and I don't want to be rude, but I was a bit dismissive of it. Like
a lot of people have been. A lot of people have.
Yeah, I don't mean the product. I mean that it encourages better, more responsible consumer behavior. And when you said it before, I don't know why. For me, it just sounded like a nice thing to say, but I didn't really buy it. But now that you're actually talking it through, it really does. Because, 100%. I'm even thinking of it, and I don't want to patronize anybody, but I'm even thinking of it in terms of my own children. I would prefer them to save for something, put things away, keep an eye on the prize and work towards it, at some point get it, etc., rather than saying, I really want it, I get it, okay, I'll pay for it for the next however long.
Yeah.
It's got to be healthier for us, especially in our current quick fix world.
And let's take your children example. They might be not yet of the age where they've built a credit rating.
That's a big thing.
So now how are they going to be able to build a credit rating? And unfortunately, the only way is to actually take debt. So that doesn't create the right example for a young individual to start understanding what debt actually means to them when they're pushed into a store card or a retail environment to start taking on debt that is buying things that they actually can't afford. Whereas LayUp is teaching that exact behavior. And one of the great products that we work with is a company called Howler that runs the Matric Rage event at the end of each year. And we provide payment plans for this event. And now it's an expensive week away for the parents.
Very.
Before the child is even...
But hell, it looks like fun.
It does. Yeah. But before he's also matriculated or she's matriculated. So we've seen a lot of parents take up the product, the LayUp solution, because you're taking it...
So it's not limited to the bed, the fridge...
Totally not. Across, we across.
So you can do holidays, say for holidays.
We're doing holidays, for example. We're doing funeral policies. We're doing burial homes. It really ranges from all kind of verticals to all types of consumers.
I just want to challenge you on one thing. There can't be a dopamine hit about a funeral.
Look,
I'm being facetious. Ignore that. But no, it's actually incredible. Again, I was thinking about it in very, very in the box terms, in terms of the fridge, the TV, the whatever it would be. But this is fascinating. You've also recently engaged with Pick n Pay, haven't you?
Yeah. So it's Pick n Pay clothing. They didn't have a lay-by product, and we approached them and said that this is a product for your consumers that are kind of screaming from the rooftops, asking for it. And here's a bit of technology that can get you to market rapidly, that will give you the data and real-time information as to how your consumers are adopting the solution. And they decided to go ahead with us and give us an opportunity to pilot. We piloted with 4 stores, and it's been a fantastic uptake.
Unbelievable. So where to from here? Because this really has the ability to change our world in in the space for the better, doesn't it?
Yeah, so if you just look at the numbers, we've done a lot of research over the years. You're looking at your credit bureaus, for example, in terms of how many people are on the credit bureaus, and you're looking around about 25 million people. 60% of those people have impaired credit records. There's 6.5 million active credit users in South Africa versus that 25 million odd consumers that are locked out of the economy. So from a macroeconomic point of view, the market is enormous. And if we can find, which we have definitely made progress towards, a easy way for consumers to buy without credit and still get the items and the things that they need, then over time that can really have an impactful relationship with those consumers.
Absolutely incredible. If anybody wants to get hold of you, how do they do that? Because I mean, I certainly would if I had, as I said, there's so many different opportunities. It doesn't need to be a physical retail space. It doesn't need, there's many ways in which companies can benefit and provide additional value for their customers. How do they get hold of you?
Of course, you can go visit our website, layup.co.za.
Layup.co.za.
Yeah,
right.
LayUp, lay it up.
Okay, we got it.
Or you can contact me on LinkedIn. I'm very available on LinkedIn, and we'll just contact our contact center. But any type of business that's out there in South Africa that's looking for a way to increase their sales, open their market to consumers. One of the questions that we always ask is, where are your consumers going if you're only offering credit and full payment options? You're going to have anywhere between 60 to 80% drop off. Yeah, so this opens your market, allows you to serve more consumers, and therefore that's going to be an added benefit to your business.
Absolutely awesome. Well, we're going to keep checking in with you, Andrew Katzwinkel, who is the CEO, the founder of LayUp Technologies. I think it's interesting. Leave your comments below. Let us know if there's anyone else you want us to speak to, a subject you want us to cover. I'm Howard Feldman, and this has been an episode of Synthesis TV.